Should you wait to buy more shares in your investments for the recession, or a correction, or a pullback, or a dip? Should you wait for any of that? This seems kind of counterintuitive to me as a long-term buy and hold investor. Wait for the stock that you bought because you like and you're bullish on to go down. Why would you do that? And yet, it's one of the most routinely asked questions that I get. And I understand it to an extent. I mean, after all, stocks are hitting all-time highs seemingly every day. It kind of makes sense with everything going on in the world right now that there might be more downturns in the market or more pullbacks, or even maybe that soft landing that we've been talking about might not happen, but nobody really knows for sure. I remember on TikTok in 2023, at the very beginning of the year, a lot of finance influencers came on this very app and said, I'm selling everything. I'm taking profits. I'm getting out of all of my investments. I'm not buying a single stock or ETF all year because the recession is coming and I'm going to wait for that to happen. And it never happened. Instead, markets went up a lot. And when I see finance influencers making videos on I'm selling everything, what I worry most about as another finance influencer is that inexperienced investors are going to listen to those videos and go, well, if he's selling everything, if she's selling everything, I'm dumping my stock too. But you have to remember that you are a buy and hold long-term investor here. It doesn't really matter what the stock is. You're buying it not because of your fears of the next couple of months or weeks or whatever. You're buying it because you think in a decade or 2 or 3, it's going to be considerably higher. You're going to be able to sell your stock for massive gains and retire hopefully a lot earlier. That's why you're investing. You could wait and wait and wait for a recession that may not come in the period where you're expecting it to come. And like all those other big time finance influencers last year who sold their stock and didn't benefit at all from the gains, missed out. The best approach, in my opinion, is to just dollar cost average in a way that works for you. So one option would be you want 100 shares in a company, you buy 100 shares today, you lump sum invest, and you forget about it. Another option would be if you were worried about tumultuous markets, that you could half lump sum, buy 50 shares, and then sit on the reserve capital. That way you've got some skin in the game if the markets go up, but you're also not tying up all your money in case the markets go down. And the last question I have for the people who say, I'm waiting, is what happens when the markets do go down 20%? Will you buy then? Or will you look at that and say, oh, I'm not touching this market. We're down 20%. It could go down 40. I'll wait for that. You know what I mean? You're always going to be talking yourself in and out of different things. So just pick a plan, stay consistent, invest periodically in a way that works for you. Oh, and the most important thing, smash that follow.